Hey everybody, this is Bob, a trade genius, and my good friend Phil with me today. Soft landing, hard landing, crash landing, getting thrown out of the solar system. Stay tuned. You're not going to want to miss this one.
Trade Genius.
Okay, Phil, everybody's talking to us about this nice touch and go landing that the Fed's going to engineer, but the consumer's telling us differently. What are they saying?
Yeah, let's just dive into the charts here. So basically what we've got here is buying conditions. This is from the University of Michigan Survey of Consumers, similar to like when we get the consumer sentiment, which is actually a very high impact news item that comes out. And so basically what we have is the same kind of study, except we focusing on housing conditions, buying conditions for housing, buying conditions for vehicles here. And these numbers, Bob, are just catastrophically low. I mean, we're talking like going back to like the sucky years in the 80s, right? Like that bad. So, if you look at these charts, you see these numbers, you think about, well, the Fed's trying to feed us a soft landing narrative, or some are telling us no landing, meaning that there's just going to be no dip in the economy. And if that was the case, then I don't think we would see buying conditions. And this is not what the government's telling us. This is what the consumer is telling us, right? Because these surveys are just simply the University of Michigan going out and polling people. And that's why the other metric that I think is more important than what the job numbers we're being told supposedly are from the government is the household survey, right? Which is basically the same thing. It's polling people and getting a real sense of what the job situation is for people. Do you have a primary job? Do you have multiple secondary jobs or part-time jobs? Things of that nature. And that to me is a much more telling situation of the labor market than the government data. But that being said, I think what we're dealing with here, and at least in my terms, and I'd love to get your opinion on it, but I think the consumer is already in a recession, and that's what ultimately what's going to drag down the economy, because if the consumer is not growing and we're not expanding, then GDP is probably going to be revised lower. And then that means that forward earnings, which is all the stock market is a measure of forward earnings, and ever so higher multiples of that in the current leverage conditions that we're in. And that's not unheard of, because it is late business cycle in as far as I'm concerned, and you do get into high leverage situations in that environment. So basically what we're seeing now is just kind of a dislocation. To me, it's similar to like when we saw COVID and that COVID rally, and we're going like, man, this is so detached from reality. I mean, the economy is basically dead, right? Everyone's home, but they basically were just printing and printing and printing, and all of that money, well, not all of it, but by and large, a lot of it was going back into the stock market and pumping things. So I think in a similar vein, we're going to get this dislocation of reality doesn't match what the stock market is doing. But again, in a late business cycle with leverage and things like that, you do get a dislocation. That it's not the first time in history that this would happen. So what does that mean? I think, Bob, we're going to get a lag effect that might buy us some time into this market pop that I still think is unfolding into this, and could even get us beyond the election into maybe the inauguration. Historically, if you're up into the inauguration, especially when you have this kind of setup, that is a window of time where you would look for the market to top out and roll over. So that's what I think is happening here. I think that's what this means.
Yeah, look, from a macro standpoint, once you turn 65 and older, your spending collapses, especially capital goods spending. And, the window where most wealth is accumulated, to drive the market is basically between the ages of 45 and 65. And those people are rapidly getting blown out of the employment markets. A lot of corporate retrenchments. A lot of it's going to, either to AI or agents or overseas. So I don't see, and then if you're under 45, you just don't have the wherewithal to absorb any more credit. So we have a situation here where the normal remedies that they're trying to prescribe are not going to work. They could drive the interest rates down to zero, and it's not going to help enough people to keep the stock market and the economy afloat. So my view on that is that from a macro standpoint, this cake is baked. The leverage has to come out of the system. Regarding short term, this market is still fighting some headwinds here somewhere. So could it be the war? Could it be something else? We don't know. Could it be the election? And my view is simply this: if Trump wins the election, I think we're going to see a massive relief rally. If some way, shape, or form the Middle East calms down, we're going to see a massive rally, because it's going to drive energy prices down, because really energy is being elevated right now because of the short covering and the perceived loss of supply in terms of a potential conflict. So that's where I'm at, Phil. If Kamala wins, then election night is going to be a bloodbath because everybody is going to be anybody with money is going to be so panicked that they're going to try to hunker down for the 4 years or the 2 years that she's in power, that she has control. So that's kind of where I'm at right now. Every time we think the market's going to get a lift off, it keeps getting whacked in the head. So we'll just have to wait and see.
Yeah, I think let's see what happens after this week, because now we're in that 2-week pre-election window, right? Seasonally, that's pretty strong. So if we're down into this week, I think that might be a good buying opportunity for a swing trade up into that. So see what we get this week. Well, guys, let us know your thoughts on today's podcast. We'd love to hear the comments, so post them below. And as always, check out our stuff over at tradegenius.co. We got specials there, and get into the room with us. We'll help you navigate these markets. Volatility's kicking up just like we thought, and it should be more volatile, especially going into this highly contested election. So we'll see you guys in the next episode. Take care.
Trade Genius.